Ladies and gentlemen, welcome back to the channel. In today's episode, we're going to be covering everything this market. What's happening today, all of the latest news developments. Why are some areas of this market doing better than others? We actually have something very fascinating happening in 10-year treasury yields today. It looks like the bond market might be responding to some of Trump's comments around Greenland. And we'll talk about that in today's episode. We're also getting news that we might get a Supreme Court ruling on tariffs coming early next week, and that could be a big catalyst. Now, next week, we have a bunch of earnings that we're going to be going through, and then the following week, you have more of your big tech earnings. But in this video, I'll explain why I think the markets are set up in a very positive way. The first thing that I want to show you here is the AI Investor Sentiment Survey. You're at a one-year high for the bulls, but yet this is not the most bullish the market has been in the past year. I mean, I remember September, October was probably the most bullish moment in the past year, where small caps and AI, basically everything was going up before the late November or mid-November, late October kind of correction we had. So what is this telling us about what could be coming next for markets? Well, it's telling us one thing in particular. Wall Street wants to be bullish on this market. They are bullish on this market, but we have some catalyst in the near term we need to get through to ultimately buy the news on those events. And we'll talk about that in today's episode as well. Do me a quick favor and hit that like button, as well as subscribe to the channel if you guys have not done so already. If you guys want to come trade and invest alongside us, check that link out down below in the description of today's episode. But with that said, let's begin. Now, in your broader headline indexes today, Russell 2000 is the outperformer, up 0.42%. But again, it's not a uniformly strong day, even for small caps. You're going to see that once we look at the heat map here. The NASDAQ up 0.16%, S&P up 0.15%. The Dow break even today. The VIX down about 2% to 15.56. 10-year treasury yields today up about 4.5 basis points. That's a big move higher for 10-year treasury yields. There's not a whole lot of a rhyme or reason behind it as well. We actually, if you wanted to, call something out, Fed Bowman reiterates her call for rate cuts today. Fed Collins obviously has been one of the more hawkish members of the Fed, so she did not, and we'll look at the specific headlines in today's video. But that move higher in bond yields is fascinating. It's something that is putting some pressure on this market. It says treasury yields tick higher as investors weigh the state of the U.S. economy. And that seems to be the only thing that Wall Street cares about. Is the economy good or bad? And that's obvious. That's what we should always worry about. But in context to rate cuts, it also matters what inflation is doing. And we now have 3 months in a row of inflation coming in much lower than expected. And I do think later in 2026, it's going to hit people like a ton of bricks. They're going to be like, oh my gosh, inflation's almost 2%. We should be cutting rates, right? So if we look at June 17th, the probability for a rate cut, at least one by June 17th yesterday, was 46.3%. Today, 44.9%. So dropping roughly 2% just today alone. And again, we didn't really have any economic data. Wall Street's just playing with the probabilities here. And, it is affecting markets. Now, as far as economic data, we did get the New York Fed Services Activity Index that came in at negative 16.1. Last month, you were negative 20. There wasn't any estimates here, but I imagine that's pretty well in line with expectations. Industrial production month over month came in at positive 0.4%, better than the expected 0.3%. Capacity utilization at 76.3% versus expectations of 76.2%, so a little bit better there as well. Industrial production year over year came in at 2%, expectation was 2.7%. Manufacturing production month over month for December came in at 0.2% versus the expected 0.1%. Manufacturing production year over year came in at 2%, in line with the estimate. So the data did come in a little bit stronger today, but this is not like important data. This is not data that it tends to move the probabilities of rate cuts or send 10-year treasury yields up 4.5 basis points. That's a little outlandish today, to say the least. Now, the NAHB housing market index came in at 37. The estimate was 39, and this actually came in pretty bad for future home sale expectations that came in at 25. If the break even is 50, this is the lowest number in this component of the housing market index we have had in a long time. Okay, so that was not great. Fed Collins, obviously a little bit more on the hawkish side. Fed Bowman, a little bit more, again, on the dovish side. Fed Bowman was in the running to take on the Fed chair position at one point. Seems like that's not really the case anymore. But again, not a huge day as far as economic data, and 10-year treasury yields taking a move like that. It's likely in anticipation of the Supreme Court ruling on tariffs. That is the biggest catalyst for 10-year treasury yields that we have to come. Why? Because if the Supreme Court says the government's tariffs are illegal and they have to give payouts, the government's going to have to sell a lot of bonds, put a lot of downward price pressure on bonds, which drives up yields to fund those refunds. Okay. And tactically speaking, short term, that would be negative for bonds. So I think with 10-year treasury yields at 4.2%, 4.21%, your risk reward looks really good. Like, I think the probability is 10-year treasury yields can come down from here versus go up even more, especially with the inflation story that for, again, 3 months in a row has come in better than expected. But if you wanted kind of an answer to where some of the volatility is coming from in markets today, why some small caps are doing well, some are not doing well, it is this rise in 10-year treasury yields today. Now, oil is up 1.1% as risks remain in focus, specifically Iran and the Strait of Hormuz over this weekend. I'm not surprised to see oil up a little bit today as people are kind of hedging bets heading into the weekend, because this is the last moment you're going to have before the weekend to, potentially hedge portfolios. A lot of people probably want to be long in oil right now in case anything bad did happen over the weekend with Iran. Now, silver today down about 4%, gold down 0.5%. The latest AI investor sentiment survey that we got out yesterday shows bullish investors at 49.5%, neutral investors at 22.3%, and bearish investors at 28.2%. So this is the highest level we've been at in a long time. This is a 1-year bullish high for bullish investors. But the markets aren't exactly as bullish as you've been in the last 1 year, right? Which is interesting. Why does market sentiment seem not nearly as bullish as we were in September, let's say, early October, when small caps and AI stocks were just going basically straight up? Why do people feel bullish, but stocks are not bullish or not as bullish as you'd expect? It's because of these upcoming catalysts that we have. There's a lot of hedging. There's a lot of nervousness. Once we get through these catalysts, as long as they're not super terrible, you are in a solid position to buy the news. Supreme Court ruling, you're going to buy the news on that. Jerome Powell investigation is canceled or thrown out, you're going to buy the news on that. Tensions get better between the US and Iran. It looks like we're not going to strike Iran. you're going to get a buy the news event on that. So it does seem like we are set up for positive surprises to come. Now, that's not to say we couldn't get negative news, but I do think the bar is quite high at this point, at least for these events, to get further downside from them. I think Wall Street's already pretty negative on these things. Now, really kicking off next week, you have some of your bigger tech earnings, like a Tesla that's going to report, your early tech stocks, and they're probably going to follow a similar trajectory as TSM. TSM had great earnings, and that was a big positive catalyst yesterday. And that's the only logical thing I could foresee for next week, and really the following week after that, when big tech reports earnings as well. Like, are earnings going to be bad? No. And a lot of these stocks have fallen a lot since last earnings anyways. So I think you really have a good short-term setup for this market. Now, it says here that Trump floats new tariffs in a push to acquire Greenland. President Donald Trump said he may impose tariffs on countries if they don't go along with Greenland. He said, quote, "We need Greenland for national security, so I may do that," Trump said at the White House. The comments came after the Supreme Court could soon deliver its ruling on the legality of Trump's reciprocal and fentanyl-related tariffs. So maybe you can make the argument that 10-year Treasury yields are responding to this a little bit as well. Obviously, if more tariffs go into effect, there's more perceived inflation risk, but that's just not what inflation data is telling us. I think this is more, again, in relation to the Supreme Court ruling on tariffs. Now it is scheduled, the Supreme Court will make a ruling on January 20th, potentially on tariffs. Supreme Court does not give an outline of when they're going to rule on what they're going to rule on. So they just say, look, we're going to rule on something on this day. Okay. It's happened 2 times in a row where Wall Street was expecting the ruling on tariffs, but it hasn't happened yet. The Supreme Court, just like every other court in America, is very backed up with other issues. But on the 20th, we might get that tariff ruling, which the 20th is going to be Tuesday. So if we get that ruling for next week, that could be a very much positive or negative catalyst for this market. Although, again, I think most people are expecting the worst with, or at least preparing for the worst with the Supreme Court ruling. And the worst would be if all tariffs were ruled illegal and payouts had to come for all the tariff revenue collected. That would be an event where you're going to have a correction in this market based on that. I would be shocked if we did not have a 10% pullback on that. Trump today also told Kevin Hassett that he wants to keep him where he is. So the odds that Kevin Warsh will become the Fed chair have skyrocketed today. Now, I don't think this is the causation of the rise in 10-year Treasury yields today, but it is a new development. So in pretty big news in the past 12 hours, Trump wants tech companies to foot the bill for new power plants because of AI. You can see here, Donald Trump wants PJM Interconnection to hold an auction in which tech companies bid on new electricity generation. It says electricity prices have exploded on PJM due in large part to data centers. Now, this is $15 billion worth of new baseload power generation. Not the end of the world for these large tech companies. So I don't think this is a logical explanation to, again, the volatility that we are seeing today. And while the heat map has turned a little bit more green, you are definitely still seeing some areas of this market coming under some pressure today. Banks doing a little bit better following their earnings. They were not doing great. Healthcare, mixed bag. Okay. Consumer defensives in the red today. This is a good sign, right? There's more defensives in the red today than tech. So a little bit more of a shift towards tech, even though today is just not a great day across the board. Industrials doing a little bit better. Farm and heavy construction machinery down a bit. Utilities, independent power producers really down a lot. Constellation, all of these guys down big. Utilities doing better today, again, because of the news we just shared. Oil and gas doing a little bit worse, besides ExxonMobil and Chevron. Medical devices in the red today. Telecom services really not doing great. Communication services really not doing great either. Restaurants not doing great. Consumer cyclicals not too great. Amazon down a little bit. DoorDash, eBay down. Tesla up a little bit. Google's down about 1%. Apple's down about 1%. Microsoft's up 1%. Oracle's down a little bit. Palantir's down a little bit. You get a little bit deeper into technology, becomes more of a mixed bag. Software, again, just getting smoked. I think, ironically, this is going to be the best performing area of the S&P this year, specifically software that is applying AI, that is growing with AI, that is in a hyper growth phase with AI. I think this probably going to be the best performing area of the markets this year, but it is not started off this year on a high note. Semiconductors, ironically, are the best performing area of this market today. Nvidia up 0.62%, Broadcom up 1.32%, AMD's up about 2%, and Micron just on fire, up over 5% today. Here you can see the news. The U.S. Supreme Court announces it may issue at least one ruling on Tuesday, January 20th. But we don't know if it's going to be on tariffs or not. So next week could be the week, or it could be later into January. Now what's funny about this is we were all expecting the Supreme Court ruling at the end of January, early February. That was kind of Wall Street's expectation. And then 2 weeks ago, we heard that we might get a ruling on tariffs on, what was it, like Tuesday. Wall Street gets all nervous in anticipation of this. Nothing happens. This week, Wall Street gets nervous over this in anticipation of this. Nothing happens. Next week could be the week, but at this point, I'm not going to make any large predictions on that. U.S. envoy says a Greenland deal will happen. Jeff Landry said Friday that a deal over Greenland should and will be made, adding that President Donald Trump is serious about the effort. This could explain the rise in 10-year Treasury yields today. There's some numbers that have been thrown out there that Greenland would cost the U.S. about $700 billion. How does the government raise that kind of money? Well, they go out and they sell bonds. $700 billion worth is quite a bit. If you're running a $2 trillion deficit, let's make sure everyone's on the same page here. If the government brings in $5 trillion in revenue from the IRS and taxes and all of that, they spend $7 trillion. That's their deficit. That's the amount of bonds they have to sell in a year to fund government operations. Well, if that number goes up by another $700 billion, that puts a lot more selling pressure on the bond market. Bond yields are fixed, so bond prices would fall, yields would stay the same. So your interest rates or the coupon rate, the 10-year Treasury yield would rise. And that typically puts pressure on small cap companies, on tech, on growth areas of this market. But honestly, to get any kind of deal to actually buy Greenland seems way out there in the distance. And we'll just have to see in the meantime, how does the economy do? What does inflation do? And that should correlate to your yield curve as of now. When it gets closer to maybe getting a deal for Greenland, then we'll see what happens. But even in the, again, off chance that Trump really wants Greenland, he puts tariffs on Denmark, big deal. It's not enough to really affect the economy at all. Certain products maybe, of course, but would it really hurt the economy? No. The CNN Fear and Greed Index is sitting at 62. Market momentum is neutral. Stock price strength, extreme greed. Stock price breadth is neutral. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand, extreme greed. And junk bond demand in extreme greed as well. So again, kind of as we talked about throughout this video, I think the catalyst we're set up with are going to be by the news events. The Supreme Court ruling, likely a by the news event. Iran, Trump drama, probably going to settle down a bit, I would imagine. Buy the news event. Jerome Powell, most likely the criminal and quote unquote investigation is going to be thrown out. That is likely a buy the news event. Now, this whole Greenland situation, we'll see. Typically, you don't buy land or countries quickly. It typically takes a lot of time. It's not something that would likely even be settled this year. So while it looks like the bond market reacted to that today, it seems very premature to be pricing in some of that risk at this moment, or 10-year treasury yields going up almost 5 basis points on that. It just seems very premature to me. The Supreme Court ruling is likely the biggest near-term catalyst that we have if we get that Supreme Court ruling next Tuesday. And then obviously earnings, I think that is set up in a very positive way. A lot of your big tech stocks, a lot of this market is down quite a bit from the highs. And typically heading into really good earnings, that's what we're going to get, really good earnings. We're not going to get bad earnings here. It'd be highly unlikely. It'd be really a black swan event if we got bad earnings across the board from stocks at this point. So you put all of this together, and I think we're really just in a moment where we have to get through some catalyst. But once we get the catalyst, it's a buy the news event. You're going to have a rally after that, in my personal opinion. Again, not a financial advisor, not a financial planner. Let me know your thoughts down below in the comment section of today's episode. Hit the like button as well as subscribe to the channel on your way out of this video. If you guys want to come trade and invest alongside us as well, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.